Hi traders, welcome back. Today I'm going to share with you a super high probability trend detector indicator. This indicator has completely changed the way I trade because it makes spotting reversal and trend continuation easier to spot. The best part, the strategy is simple, powerful, and works on any pair, any time frame. So let's dive in and break it down step by step. Alright, now let's get started and go exactly how this strategy works. So we only take trades when the price pulls back to one of the two trend lines shown by the indicator. These lines act as a dynamic support and resistance zone. So once the pullback happens, we don't just jump in blindly. We wait for the indicator to confirm with a buy or sell signal. That way we're not guessing. We only trade in when the market structures lines up with the indicator confirmation. So here is how a buy setup looks in action. Wait for the price to pull back in one of the two trend lines. Check that the indicator give a buy signal, as you can see we have it here. Then we do enter a buy trade, and for the stop loss we place it just below the trend line, and we set a take profit for a 1 to 5 risk to reward ratio. And as you can see here, the trade plays out perfectly. Now for a sell setup, it's simply the reverse. Wait for the price to pull back to the trend line, confirm a sell signal from the indicator. As you can see here, the indicator give us a sell signal. Then we do enter a trade immediately in the pullback. The stop loss is just above the trend line, and take profit 1 to 5 risk to reward ratio. As you can see here, the trade plays out perfectly. Now let's see some real trade example I took. First trade is a buy on gold on 15-minute time frame. So as you can see here, the price was above the trend line. So we know the market was in uptrend. We wait for the pullback. And once the price is touched the trend line, that give us our entry. So the stop loss was below the wing low, and we targeted a 1 to 5 risk to reward ratio. So this trade plays out perfectly. Second trade is a sell on gold. Here the price was below the trend line, meaning we were in a downtrend. Then we wait for a pullback to the trend line, and as you can see, after the pullback a bearish candle is formed. So this was our entry. Stop loss was placed above the swing high with a 1 to 5 risk to reward, and as you see, the take profit hit cleanly. Again here the price was below the trend line, so we looked for a sale, and after the pullback candle give us a confirmation with a bearish candle. We did enter immediately on the trade. Stop loss was above the recent swing high, and take profit was 1 to 5 risk to reward. And as you can see, the take profit is hit. And that's the power of this strategy. It keeps things simple, but what really makes the difference is the dynamic volatility trend detector indicator. It removes the confusion, gives you clean setups, and help you trade with confidence. If you found this helpful, hit like and subscribe, and drop a comment if you want me to share more setups using this indicator. See you in the next video.